Hello traders, Jason here with SwingHigh.com. It is Tuesday, February 2nd, 2010, and this is your post-market analysis. The markets popped today, the S&P up just over 1%, the Dow up 0.9%, the Nasdaq up 0.7%, the financials up 0.8%, the Russells up 0.9%, the dollar dropped 0.34%, and gold popped 0.78%. So we're getting some support from gold and dollar action here. When the dollar goes down, the markets go up, and when gold goes up, the markets go up. That's how it's been for a little while now, and that's what we saw today. No real relative weakness or relative strength to speak of among the other 5 indexes here. So it is a bullish day, though. Let me show you why. Here's the S&P 500. This is the daily chart. We'll start with the daily, why not? Here's our rising wedge. If you remember, we did break down out of it on strong volume, and things are looking really bad. We had a low base and then broke down even more on Friday. And Monday and today we reversed, and this is a confirmed swing low here. It is a not really a lower swing low, because this was just a high base, not really a swing low. It was just a high base, breakout high base, and then drop. So we do have a swing low here marked, and remember I said I wanted to get above 110 on SPY in order for that to be confirmed. So I would call that confirmed, although right now we're knocking our heads on resistance here at the 110.70 line that I have drawn in here. So the most important thing for the bulls is that this next swing high that we make is either equal to or higher than this 115, this other swing high that we had, or the highs for 2000 and well, the highs since March. If they fail to do that, if we have a lower swing high, that's going to be bearish, and that'll confirm a rolling over action here in on a broader time frame. Let's drill down into the 15-minute chart here. This morning we gapped up a little bit just above 109, although yesterday we had a strong close and closed literally just about at 109, so closing just testing that resistance. And then today we sort of broke out from there, hit our heads on 110 as expected. As you can see, we held up here and put in a bullish pennant or a symmetrical triangle, maybe even a high base if you will. Then broke out of that on some pretty good volume down here. Didn't really go too far though, and that held up as support for us, and we sort of just chopped upwards into the close, making higher highs and higher lows, or higher swing highs and higher swing lows. The only reason I can find for why we stopped there is going back to this swing high on the intraday chart back on what was that, Tuesday of last week. So a week ago we have this line coming across, and that 110.45 on SPY seemed to be the resistance for today. So that's where we're going to pull that one from, although it's not too significant, so I'm not going to drop a line in there. Let's take a look at the market internals. The VIX dropped 5% today, so a healthy drop in the VIX. We would have needed to see about 3% in order to confirm the 1% move higher in the indexes. So a 5% drop is good to see for the bulls. The TRIN, definitely bullish, flirted with neutral for a little bit in the morning, but pulled back and held under 0.8 all day, so that means more volume was flowing into stocks on the upside than on the decline. Same thing with the TRIN Q, probably it looks definitely a little more bullish. The TIC, certainly bullish with a couple bearish spikes. Nothing too worrisome there. The TIC Q was relatively neutral though. Let's look at the dollar real quick before we go. The dollar looked like it was breaking out above this resistance line and above the 200-day moving average, but now it's pulled back, so that's something to be worried about if you're a bear. And gold looks like it has put in a double bottom type formation here. Will be confirmed when it breaks 113. That's GLD. Thanks for being a part of SwingHigh.com. I'll talk to you tomorrow.